Today, we're diving into the turnaround plan for a true global giant in the chemical industry. After weathering some pretty serious financial headwinds, Indorama Ventures is making a really ambitious bet on its future. So let's break down exactly how they plan to pull this off.
And we're going to start right here with this pretty bold prediction from market analysts. This really sets the stage for a classic comeback story, hinting that a major recovery is on the horizon for Indorama Ventures, even after all its recent struggles. And that really brings us to the core question of this whole explainer. What is the plan? How does a company this massive, with operations all over the planet, make a strategic pivot to get its momentum back? Well, let's get into it.
Okay, so before we can jump into the plan itself, we gotta get the full picture. Because behind that rosy forecast is a company that has been dealing with some pretty significant storms lately. This slide right here really lays out the puzzle. On one side, you have a huge financial loss and an entire industry that's struggling with making too much stuff. But on the other side, analysts are still saying buy and are even bumping up their target price for the stock. This wild contrast is exactly why their turnaround plan is so fascinating to watch.
All right, so to really get why this comeback is such a big deal, we first need to understand just how rough the waters have been for Indorama Ventures, or IVL as they're often called.
That first quarter of 2025, that was pretty much rock bottom. The company posted a major loss, and it definitely got everyone's attention. But the key thing here is what the analysts are saying, that they think this was the low point. It was the turning point, where the only way to go was up.
And you gotta understand, this wasn't just an IVL problem. The entire petrochemical industry was facing these headwinds. There was this structural overcapacity, which is just a fancy way of saying everyone was making way too much product, which crushes prices. At the same time, demand was all over the place. IBL had to make some really tough calls, like shutting down plants in Australia, Canada, and across Europe, just to streamline things.
So what do you do when you're facing a tough market and you know you need to restructure? Well, IVL didn't just sit back and wait for things to get better. They came up with a really clear three-part plan to fight their way back. And here it is, the whole strategy in a nutshell. First up, take advantage of the market finally starting to improve. Next, unlock some serious value by selling off certain assets. And finally, look for smart acquisitions to boost profits. Let's dig into each of these, starting with the market itself. Sometimes you just get a little lucky, and it looks like the winds are finally starting to shift in IVL's favor. For one, profit margins on key stuff like PET plastics are getting better. Then you have China shutting down some of its inefficient plants, which helps with that whole global oversupply problem. And get this, potential US tariffs could actually help IVL, since a whopping 40% of their production is right there in the US, making them more competitive. Now for part two of the plan, unlocking value. This is a huge move. IVL is planning to spin off two of its major divisions, its Indovinya and packaging businesses, into their own separate companies through an IPO in 2026. This is a brilliant way to raise a ton of cash and create a leaner, more focused core company. So how much cash are we talking about? $1 billion with a B. And the goal here is super clear. Use that money to pay down debt. That move alone would massively strengthen their balance sheet and give them a much more solid foundation for the future. Okay, so we've got the problems and we've got the plan. But to really grasp this stakes here, you have to understand just how massive this company is. This isn't some small regional player. We are talking about a true global behemoth. Just to put this into perspective, IVL is one of the biggest polyester makers in the world, with a production capacity of 17 million tons. That is just a staggering amount of industrial might. And they're not just doing this in one place. I mean, look at this footprint. It is truly global. We're talking 69 operations in the Americas, 64 in Europe, 56 in Asia. They are everywhere. And these aren't just dots on a map. When you actually dig into their corporate structure, you see this incredibly complex web of subsidiaries in huge economies like the US, Brazil, Germany, and China. The source documents even specifically mention business units in Hong Kong, China, which just goes to show how deeply integrated they are in every corner of the global supply chain. All right, so you've got this giant global machine, you've got this new three-part strategy. So what's the payoff? What does the road ahead actually look like in terms of dollars and cents?
And this chart right here tells the whole story. You can see the projected leap in net profit, jumping from around 6 billion to over 8.5 billion Thai baht by 2026. This is what the pros call a re-rating. It's basically the market fundamentally rethinking what the company is actually worth now that its future looks so much brighter. And this quote really brings it all home. The company's own leadership is seeing those same early signs of recovery. They expect a much stronger rebound in 2026. And it's all driven by two simple, powerful things: demand getting back to normal and the whole industry being smarter about supply. So that's the billion-dollar question, isn't it? We've seen the storm, the bold plan, and the optimistic forecast. But is it enough? Can this combination of smart strategy and a little bit of market luck really turn this giant ship around for good? The plan is in motion, and you can bet the entire industry is watching to see what happens next.